Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, 11th day of April, 2017, and this is the Daily Report for Gold and Silver. Geopolitical hotspots sizzle on two fronts, both North Korea as well as the Syria conflict, as Head of State, or Secretary of State, Ralph Tillerson goes to Moscow today and makes some hard-line statements, drawing a line in the sand. We have seen gold as a safe haven asset react in a volatile and upside manner, currently trading up about $21, $21.50 at $12.7550. We did send out a special trade alert this morning recommending the initiation of long positions. Traders taking that call are in at roughly $12.75. We will discuss that trade in detail when we pull up our first chart. Gold is currently trading up almost $22, a net change of about 1.7%. Spot gold also trading higher, $12.73 and change, putting it up about $19, a net change of about 1.5%. Over to silver. Silver, of course, is reacting in a couple of ways. That is trading higher, now trading up about 2%, 38 cents higher at $13.29. But if we see any kind of weakness in the U.S. equities markets, that industrial component of silver could act adversely, and we could see it really not trade with the kind of net gains that we saw today or that we're seeing in gold currently. In response to the events that we spoke about in our opening statement, meaning Tillerson's visit to Moscow and his line in the sand about Russia's actions and responsibility towards Syria, as well as statements made in the North Korean press, which they are threatening the USA with a nuclear strike, we have a upside surge in the precious metals markets, with gold trading up approximately 1.75% higher, trading up $21.70 at $12.7560. As we spoke about yesterday, we have been waiting for an effective close above what we considered to be former resistance, and I believe that will become support now, but that former resistance resides roughly at $12.63. And of course, that resistance point is based upon these former tops. This one here, which occurred in February, that was up until very recently our record high for the year. Of course, that was taken out late last week. However, when we did take that out last week, gold was unable to sustain that move and actually closed well below it. This is that mark at $12.63. Today, we had not only a defined breakout, but more importantly, a close effectively above this. And this is what we spoke about yesterday. Of course, I wish we had still been in the position we got out of yesterday. We're stopped out with a smaller profit. However, facts are facts, and I believe that we have the opportunity at this point to see this market at least break to about 1,300. And my upside target right now, and I will discuss where that comes from, is based at 1327. Now, this 161 extension is an extension that I have created, in which we started our extension from the low that was achieved back in the end of 2016, as gold went from 1120 up to this high at about 1260, and then we start the extension from the termination of the correction that followed roughly after that at about 1190 in that area. And when we do that, our first area that we want to look at, of course, is going to be 1276. That is a 1-to-1, and we close just shy of that. I don't see much problems going through this particular price point. Of course, after that, we would want to look at the area of around 1300. And to make more sense of that, let's go ahead and compress this chart. And when we do that, there is a couple of areas that I believe we could see some resistance come in at should the market continue to rise. The first is just above 13. I'll call it about 1310. It's based upon these tops that occurred back in November of last year. Above that, of course, we have a series of tops just above 1340 here, here, and then of course our absolute tops that sit at around 1370. However, as I said, my target for this particular trade resides at 1327. In other markets that we follow, a Dow Jones Industrial Average coming well off of the lows. Lows today 20,512. Close today is 20,651, putting it down about 6 points. Let's call it unchanged. So we are now on the fourth day of quietly unchanged prices in the Dow as well as the S&P. As you can see, 2353, very, very little change. And the same with the NASDAQ, although the NASDAQ is down a little bit more, down about 0.25%, trading at 58.66. Over to crude oil. Crude oil has been rising and rising dramatically. However, today it's only up about 0.33% at 53.27. And lastly, I do want to look at the dollar index. Dollar index is trading lower today, off about 0.33% at 100.64. Interestingly enough, as we saw gold really rise as a safe haven asset, in response to the geopolitical hotspots that really have come to a head over the last couple of days, we have some pressure, downside pressure on the U.S. dollar. U.S. dollar trading off about 0.33% at 162. We are looking at a daily chart, and on that daily chart, we can see that over the last couple of days, we have seen this market come down a little bit, but what is most noteworthy today is the fact this is our 50-day moving average, our short-term, and then our 200-day moving average down here, but is the fact that this market closed just below our 50-day moving average. You can see current price 106.2, and this sliver of blue that is right here tells us that we do have the 50-day moving average just slightly above that price point. Therefore, if we continue to see downside pressure and any kind of severe pressure, we might not see any kind of support until the market hits about 99.50, and that of course is based upon these lows right here, and could go as low as our 200-day moving average, which could factor in right at around 99, which also comes out to a fib retracement point. And traders, the fib retracement point that I'm speaking about is evident on this chart that I just pulled up. It is also a daily chart, but we're using Japanese average format. We can see this clear and strong move to the upside from this level of support, which sits at around 99, 99.27, and that in fact is a 38% retracement from this longer move from 92 on the dollar index up to just shy of 104 at 103.82. Our 23% retracement comes in at 101 roughly, and our 38% retracement comes in just above 99 on the dollar index. And traders, lastly, I do want to take a look at U.S. equities. U.S. equities over the last couple of days has been closing in a dramatic doji-like manner, meaning that the open and the close have been pretty much identical or one or two ticks apart. You can see that in today's activity here, as well as yesterday and the day before. And so for the last 3 days, we have had this tight range. But what is noteworthy in today's trading is the low, because the market traded to a low of 23.37. Of course, it closed at 23.53. But as it traded below that, it did break below for a short instance that 50-day moving average, and that's this dashed line right here. However, it did close above that. But we have certainly seen consolidation in the market, and now with the fundamental news that is out there, my question is whether we are seeing consolidation or the first sign of real weakness in U.S. equities. So traders, based upon the information available to us and the high probability that these two conflicts in North Korea as well as Syria with Russia involved will not be resolved overnight. These are thorns in the heels that have been present for quite some time, but they seem to be coming to a head right now. Therefore, traders, my recommendation is to maintain our current long position as well as to maintain our current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.